CNBC TV 18, celebrating 15 years of leadership.
Story tonight, the government uses the ordinance route to push two key reforms that didn't clear Parliament in the winter session. FDI and insurance is hiked to 49% through an ordinance, and the ordinance on coal is repromulgated to facilitate auctions between the 13th and the 22nd of February.
Major public sector bank reforms may be on the anvil. Prime Minister and Finance Minister called for a two-day Gyan Sangam with PSU bankers starting 2nd of January in Pune to hammer out a reforms blueprint. Governor Raghuram Rajan and key Finance Ministry officials likely to attend.
Expiry day jitters dampened the Christmas spirit on the Lal Street. Nifty drops below the 8,200 mark with a 100-point loss, and Sensex loses about 300 points. The rupee weakens to a one-week low of 63.51 to the dollar.
Aviation Minister moves to put a leash on airfares. Sources say the ministry working on a framework to regulate airfares. Maximum fare for an economy class to any destination may not exceed 20,000 rupees.
And the Finance Ministry gears up to compress expenditure targets by 70,000 crore rupees this fiscal to meet the 4.1% fiscal deficit target. The plan involves 35,000 crores in expenditure cuts by various ministries and 35,000 crores via notional savings.
The Securities Appellate Tribunal questions whether market regulator SEBI overstepped directions of the Delhi High Court by investing DLF for violations under the Fraudulent and Unfair Trade Practices Regulations. SEBI responds, saying these violations fall under its jurisdiction.
Shares of Ultratech and JP Associates soar in trade. This after Ultratech bought JP cement assets in Madhya Pradesh. JP expects debt to come down by 20,000 crore rupees. Ultratech believes the 5,400 crore rupee valuation was reasonable.
For the first time, Russia could see its credit rating reduced to junk as S&P raises the red flag. European markets, meanwhile, in the mixed bag. Wall Street remains in record territory.
And on the hour, co-starved with mounting debt, the power sector had a tumultuous 2014, a look back at the year that was.
The founders have walked into golden sunset, and Vishal Sikka is the man in the hot seat to steer Infosys out of the woods. A special report coming up in India Business Hour.
अटल जी भारत के सच्चे रत्न हैं, एक महान देशभक्त।
माननीय श्री अटल बिहारी वाजपेयी जी को भारत रत्न से विभूषित किया जाता है, तो वाजपेयी परिवार अपने आप को बहुत गौरवान्वित महसूस करता है।
आज हम सब के लिए बहुत खुशी का दिन है कि हमारे प्रेरणा स्रोत हमारे नेता अटल बिहारी वाजपेयी जी को भारत रत्न देकर उनको गौरवान्वित किया गया है।
मालवीय जी को भी बहुत पहले मिलना चाहिए था और अटल जी को भी बहुत पहले मिलना चाहिए था, पर चलिए जब हुआ तब हुआ।
Malviya ji is a great freedom fighter. He established the Banaras Hindu University. Shri Atal Bihari Vajpayee has been one of the most outstanding prime ministers and political leaders that India has seen.
On the eve of his 90th birthday, former Prime Minister Atal Bihari Vajpayee has been honoured with a Bharat Ratna, and along with him, freedom fighter and leader of the Hindu Mahasabha, Madan Mohan Malviya, has also been awarded the highest civilian honour posthumously. But Kritika, you know what else it is today? It's Christmas Eve. So all I'm going to say is,
Okay, one second. Let me get this too. Ho, indeed. And Nantara, in fact, what you just said, with that, India now has 45 Bharat Ratnas. So good evening and thank you so much for joining us on India Business Hour on Christmas evening. Nantara and me are working today, but we are hoping you are comfortably sitting at home watching us.
Well, we might be at work, but as you can see, plenty of Christmas cheer here at CNBC TV 18. Unfortunately, that cannot be said for the Lal Street. And this is why. Expiry day jitters on the Lal Street dampened the mood on Christmas Eve. In the last 1 hour, we saw markets nosedive. The Nifty fell below 8,200. That index in the process lost nearly 100 points. Under the Sensex now, that crashed 300 points and, it's continuing to move closer and closer to 27,000. Mid-cap index, however, managed to hold its head above water, ending with marginal gains.
And the big story this evening, of course, from the capital, the Union Cabinet has decided to take the ordinance route for coal and insurance bill after it was unable to get the Rajya Sabha's nod. Let's talk about insurance first. The ordinance has proposed a 49% composite FDI cap. Finance Minister Arun Jaitley said that the opposition forced their hands due to disruptions in the Rajya Sabha. He also clarified that all the recommendations made by the Select Committee have been incorporated into the ordinance. Jaitley said that he expects foreign investors to pump in and listen to this, $6 to $8 billion to the FDI route.
Ordinance demonstrates the firm commitment and the determination of this government to reforms. It also announces to the rest of the world, including investors, that this country can no longer wait, even if one of the houses of Parliament waits indefinitely to take up its agenda.
There's the Finance Minister explaining why it was necessary to come out with those two ordinances. And, as expected, the opposition up in arms. For example, the Communist Party of India has written to the President Pranab Mukherjee urging him to reject the ordinances. CPM leader Sitaram Yechury wrote to Mukherjee earlier in the day, and I quote him, "The issuance of an ordinance would be a grave violation of the sanctity of parliamentary proceedings. I am sincerely requesting you not to sanction such ordinances. Taking recourse to such an ordinance route under these circumstances would be a clear violation of our established parliamentary democracy." End quote. So, Kritika, as expected, the opposition up in arms. But, for example, the Confederation of Indian Industry came out with a press release saying that, it's great that even if you have the parliament stalled, the government is moving ahead with reforms.
Absolutely. But let's understand, Nantara, how the insurance sector is likely to react to this piece of development. What exactly are foreign investors thinking at the moment? And will we actually see big capital coming in? Ekta Batra, who's been talking to her sources all day long, joins us now with the details. Ekta, what are you picking up? Can we expect a significant inflow of capital?
Well, the Cabinet has approved the insurance ordinance, but what are foreign investors thinking at this point in time? For example, the big question is, will FIIs or FDIs commit fresh or incremental capital just based on an ordinance, or would they like to see more certainty and for it to become a law? We spoke to a couple of stakeholders, and the general tone was that there should be more certainty from the FDI, FII before they commit capital. For example, HDFC Life said investors will be hesitant to invest on the basis of an ordinance, and they hope the insurance bill will be passed in the budget session. Similarly, Max Life Insurance said that the insurance ordinance indicates a firm resolve on the government's part. However, the ordinance is an interim measure, a statement of intent, and they will see some tentativeness, or the industry will see some tentativeness until Parliament passes the bill. Lastly, SBI Life Insurance too had a similar tone, where they said they expect foreign investors to process information in the next 6 months, and post that expect concrete proposals to come in. So overall, yes, the ordinance is a strong statement of intent from the government. It is a positive according to industry stakeholders, but maybe the FDI, FII, foreign investor community would like to see more certainty via law as opposed to just an ordinance at this point in time before they commit fresh or incremental capital.
All right, Ekta, thanks for breaking that up for us. Joining us now to talk more about this is Khushru Pandke, partner in Walker, Chandiok and Company in the studio here. Thank you so much, sir, for speaking to us. Let me begin by asking you, you heard Ekta point out that foreign investors are concerned when it comes to the tentativeness of this. Do you expect a significant inflow of capital, and how significant is this ordinance currently?
Well, according to me, actually, this being an ordinance is not really the law of the land because, as you are aware, the act has to be passed by both the houses of the parliament. Unfortunately, in this particular conclusion of the winter session, the law could not be passed. As a result, this has to go through the ordinance. Typically, if you look at the ordinance, it shows the strength of the government that, yes, they have the confidence that things should go fine in the near future. But an ordinance is an ordinance, and I therefore really believe that I would not expect significant amount of inflow coming into this particular sector until such time that the bill is approved by both the houses of the parliament.
How are foreign investors seeing this? $6 to $8 billion is what the finance minister has pegged this. Foreign investors clearly have concerns, and as you heard Ekta also point out, there have been issues with respect to regulatory concerns as well. What are foreign investors telling you?
Well, the foreign investors believe that, yes, this is a good market because if you look at the insurable population versus the insured population, we only have about 4% of the population in India which is being insured, whereas there is a major scope for the insurable population. So clearly, India looks like a great market, a very big market where insurance is concerned. There is a good scope for the existing players as well as the new players to be a part of this. And I believe that they are positive in terms of enhancing their stake, in terms of having their shareholding to about 49%. And at the same time, I believe that there will be more new insurance players looking out for strong business houses in India, which would be the JV partners for them in the new insurance businesses. So I believe that foreign investors are very positive. They are seeing a good amount of potential. Over the last 14 years, insurance businesses have been in the private sector. Companies have started to make profits. So they also believe that there would be return on capital as well. And therefore, it looks like a favorable decision.
Kushro, so you're expecting deal activity to pick up in the insurance sector. Now, something else that the select committee spoke about, it's there in the insurance bill as well, has to do with the definition of control, where it is pretty clear the government is trying to align it with what we have, with the DIPP's definition, with what we have in the various press notes. You talk to various foreign investors. Is that an area of concern, 49% with no control?
I believe it should not be an issue, particularly on account of the fact that even with the 26% when they did not have a control, initially and over a period of time, they did have their own ways of supporting the insurance business, whether it is by way of technology or whether it is by way of actuarial support, or it could be on account of many other best practices. So truly, if you look at it with the holding of 49% with no control per se, it should not be hampering the relationship, or I would believe that it also sort of, would give them a little more of momentum that, yes, with 49%, their commitment would be much higher, and I believe that they would be much more interested in sort of playing a larger role. Because even today, a lot of technology, a lot of support comes from the foreign partners, and that would continue as well.
So baby steps, I guess, is what the government is aiming to take right now. Kushro, the other thing I want to ask you is, you touched upon this in your first answer. You're expecting deal activity to take up. Would that mean you're expecting the existing joint ventures to be reconfigured? We have plenty of foreign, not plenty, but quite a few players in India at the moment. Do you anticipate them increasing their stake? And I don't know what's in the final bill, but the select committee has talked about this and said that fresh issuance of shares is not going to be mandatory to hike stake.
Well, there could be two alternatives. One is a transfer of shareholding from the Indian JV partner to the foreign JV partner to enable the increase in the stake by the foreign JV partner from 26% to 49%. And the other could be, and it's a more viable option, and that could be definitely in the interest of the insurance industry and in the interest of the country, to have a capital infusion, because that would actually sort of, pump in money, which is to the extent of about $5 to $8 billion. And if you look at about even $8 billion on the higher side, it is equal to around 50,000 crore. Now, the total amount of capital deployed in the private insurance industry today of both the foreign partners and the Indian partners is to the tune of around 35,000 crore, of which the participation of the foreign partners is about 8,700 crore, being 26%. So when I compare that 8,700 crore, which is the existing capital of the foreign insurance partners, vis-a-vis the anticipated capital from the foreign inflow to the tune of around 50,000 crore. Look at the kind of money that will come in India over a period of time, as you rightly said, the baby steps. But at the same time, with this money coming in India, this amount of deployment of money into the insurance business would better the infrastructure, would better the social sector, because these monies have to be invested in the infrastructure sector, social sector, rural sector to meet those obligations. And at the same time, a lot of money gets into the government securities. So I look at it very positively in terms of a good amount of inflow coming from the foreign insurers.
Thank you so much, sir, for speaking to us. So clearly, as we were talking about this will take some time, and as Nantara just said, baby steps again. Thanks a lot for speaking to us. Moving on, the Union Cabinet has also decided to take the ordinance route for coal after it was unable to get the Rajya Sabha's nod. The first round of the auction will take place between the 14th and the 22nd of February, and it will involve around 41 coal blocks. Anshu Sharma has all the details. Anshu?
Well, the re-promulgation of the coal ordinance has extended the validity of this ordinance till it becomes a law. The Union Cabinet also approved the formula and methodology for the auctioning of these coal blocks, which is as same as what was floated by the Coal Ministry in the approach paper. The base price for regulated sector, which will be for the power, is now set at 100 rupees per ton. And there will be reverse bidding with the ceiling of Coal India price. The reverse bidding is being used to keep electricity tariff under control. For the unregulated sector, floor price is set at 150 rupees per ton and will be applicable for steel, iron, cement and merchant power-based industries. In total, the government is aiming at allocating 101 coal blocks, but in the first tranche, government will allocate 42 coal blocks, of which 24 will be auctioned between 14th to 22nd February. Let's now listen in to the Coal Secretary Anil Swarup on the auction blueprint.
Either a law had to be in place by then or another ordinance, and since Lok Sabha passed it and Rajya Sabha was still considering it, it became necessary to re-promulgate the ordinance. As far as the auction process is concerned, we are going ahead with what we were doing earlier. The registration starts tomorrow, that is 25th of December. On 27th, the tender documents will become available. The auction will actually happen from the 14th to 22nd of February, and we are very hopeful that by 23rd of March, for these 42 blocks, the auction process will be over. This is important because, as you know, Supreme Court had given this right to continue to mine till 31st of March to such allocatees in these 42 blocks. And after that, there would have been a void if we were not able to put in place somebody else to take care of those mines.
So the Cabinet has also approved the formula and methodology for the upcoming e-auction. So could you elaborate on the amount of base floor price as well as reserve price meant for the unregulated and the regulated sector? Also, how many total coal blocks will you be auctioning or allocating in the upcoming e-auction?
To begin with, we are going ahead with 24 blocks for auction, and rest will be allocated. For the purpose of auctions, in case of regulated sector, we are going for the reverse bidding process. This has been done primarily to keep tap on the tariffs. In the reverse auction, the tariff will actually come down. So it is to benefit the consumer that this process has been adopted. For the unregulated sector, we will have the forward auction, where the highest bidder will take the block.
Remember, Anshu was the first to break that exclusive story for you earlier. But sticking to this, speaking to CNBC TV 18, former Coal Secretary PC Parekh says that the move will have a direct impact on coal prices, reducing the possibility of a price hike since the competition within the power and coal sectors will now be limited.
Government has earmarked different coal blocks for different sectors. So the competition will be within power sector, within steel sector and within cement or other sectors. And therefore, the competition to that extent get limited, and therefore I don't think prices will go sky high. Second thing is, yes, since the power is a regulated sector, if the prices go up, I'm sure the pass-through mechanism will take care of increase in prices. My take on reverse bidding is that it will give an opportunity to people who have those blocks currently with them to try to see that they are able to retain those blocks and their supply of coal is not adversely affected, or they don't have to move coal from different places. This will give them opportunity to, even if they have in the original bid not bid the right price, they will have a chance to get back their block by reverse bidding.
All right, brace yourself for more big bang reforms up ahead from the government, especially in the banking space. The Prime Minister and the Finance Minister have called for an intensive two-day meeting with PSU bankers in Pune on the 2nd and the 3rd of January 2015 to prepare a blueprint of the reform action plan for the banking sector. Now, RBI Governor Raghuram Rajan and key Finance Ministry officials have also been asked to attend this very important meeting. On the agenda are issues like the consolidation and restructuring of public sector banks for better efficiency and capitalization needs, effective risk profiling and recovery mechanisms for banks, HR-related issues, and of course financial inclusion, financial literacy and direct benefit transfer, and priority sector lending and interest subvention schemes.
It's a retreat for banks and financial institutions which is being held at Pune. On the 3rd, realizing the importance of this meet and with an idea that we need to inject more liquidity into the market, the Prime Minister would also be going to Pune to participate in the concluding session of the bankers' meet.
That crucial meeting on the 2nd of January in Pune to lay out the blueprint for banking reforms. And here are the other crucial decisions that were taken by Cabinet today. Was certainly a big bang meeting. The FDI cap for medical equipment has been hiked to 100% via the automatic route. As of now, medical devices were considered under pharmaceutical and were therefore subjected to FDI limits as well as mandatory government approvals. This is expected to give a fillip to domestic manufacturing. Not just that, the Cabinet also approved an ordinance to regularize e-rickshaws which were banned earlier this year due to safety concerns. The government passed a bill in the Lok Sabha on e-rickshaws, but like the insurance bill or the coal ordinance, it could not get it cleared through the Rajya Sabha. And now, once again, resorting to the ordinance route.
Clearly, Cabinet picking up on some lost time, but more policy news for you. Tax collections have been tepid and divestment revenues yet to kick in. The Finance Ministry faces an uphill battle to achieve its 4.1% fiscal deficit target, and top Finance Ministry sources tell us that expenditure will be compressed to the tune of 70,000 crore rupees to help meet the deficit target. Sapna Das, who broke that story, is joining us now with the details. Sapna, where will the government cut its spending then?
Well, basically the cuts are likely to be on the plan side, because that is what has been kind of, kept on the higher side when the July budget was prepared. On the non-plan side, in any given year, it's a very tight situation for the government, because the commitments there are something that you really can't avoid, like subsidy payments, the interest payments on the borrowing that the government does, and also on defense payments. So those are sacrosanct. There you don't have any space. So it's a plan allocation which might see a kind of a rejig, or rather a kind of a squeeze. The squeeze in terms of the total magnum is going to be 70,000 crores. But the important part here is that half of this might actually be a notional saving, a notional cut, in the sense that there's a lot of unspent money lying with the government in terms of outlays to ministries, which have not really happened so far because there was not much of demand. So around 30 to 35,000 odd crores is going to come in from there. And the actual fiscal cut as such, or rather the expenditure cuts as such, could be on the lower side, around 30 to 35,000 crores. That cut will again happen because many ministries which have borrowed money, or rather which have taken money from the plan outlay, have not really given their statements showing what has been delivered on ground. And last quarter of the current financial, or rather of any financial year, is always tight for the government. They always follow the austerity measure benchmark of 10%, keeping everything under wraps under 10%, and not more than 30% allocation in the last quarter. So, or rather 15% allocation in the last quarter. So this is all going to come around 70,000 crores is what they're already looking at. This is much lower than what the Chief Economic Advisor, Dr. Arvind Subramaniam, has estimated in his mid-year economic review. There he has given a figure of around 1 lakh crores, in fact over 1 lakh crores broadly, in terms of a likely expenditure cut, keeping the nominal growth rate of GDP coming down, and also revenue buoyancy not keeping pace with the kind of numbers that have put out in the FY15 budget. Very quickly, the other very important thing that's now going to come up. This is the FY15 budget, but what about FY16 onwards? It's going to be really important. The 14th Finance Commission recommendations are in, and we get to hear that the Commission has recommended a much higher tax devolution formula, which means basically the centre will have to part with more money from its kitty of central taxes to state governments, which means that FY16 onwards, there could be a bit more pressure on the centre's finances. Now, the Finance Minister is going to meet the state FMs on December 26th, and most likely this big agenda is going to get flagged off, and the dialogue with the state governments will actually begin on that front. So we have to wait and watch and see what kind of reading on the numbers actually happen for the next budget, that is FY16 also.
Right, it's going to be interesting to see by how much we're going to see that expenditure being compressed when Arun Jaitley presents the next budget. Is something we've been talking about here at CNBC TV 18, unutilized funds to be part of that expenditure compression. And Sapna, like we've also reported, maybe those funds will also be used to compensate the states for rolling out the goods and services tax. They haven't been compensated since 2009. Thanks a lot for joining us with those exclusive details. Here's other news coming in from North Block. Finance Ministry likely to take a call by the end of this week on extending the excise duty cuts for auto, capital goods as well as consumer durables. As of now, that duty relief expires on the 31st of December. It's already been extended once by Arun Jaitley. Government caught between the poor indirect tax collections and the fiscal pressure to save money. But then, on the other hand, you have low growth in the manufacturing sector, which is remaining a big concern. Speaking of growth, sources tell CNBC TV 18, the government may also defer the rollout of the General Anti-Avoidance Tax, or GAR. Currently, the timeline for GAR rollout is April of next year. And this could be postponed due to concerns over growth. An announcement is expected in the Finance Minister's budget speech come February. Kritika.
Well, let's move to the skies. Nantara, spooked by the near demise of SpiceJet, Civil Aviation Minister A. Gajapati Raju today asked Secretary V. Somasundaram to devise a mechanism for short-term regulation of airfares. A large part of SpiceJet woes were consistent low fares throughout 2014. Chindu Bhattacharya now joins us with the details. Chindu, what does this exactly mean? Not really great news for customers or people that are looking to travel, but any positives yet?
So the Ministry of Civil Aviation has today asked the Secretary to devise a mechanism to regulate airfares. They don't want any other airline going the SpiceJet way. The Secretary is expected to come up with a mechanism to regulate airfares within a month. The Ministry wants that the highest fare that an airline can charge capped at 20,000 rupees. The minimum needs to be capped at the cost that an airline bears plus a little bit of markup. For this, there could be some audit of the airlines to figure out how they do the costs. The intention is to let airlines charge within a certain range, and nobody should be indulging in predatory pricing. Also, separately, the ministry is going to talk to the Finance Ministry to accord several SOPs to airlines, for example, infrastructure status, cheaper loans at just about 8% of interest, asking stakeholders like Airports Authority and oil companies to back off and not constantly ask the airlines to pay up their dues. Various other SOPs are being considered. Now, whether the Finance Ministry will agree or not remains to be seen, but regulation is certainly something that is happening for the first time.
Thanks, Asindu, for joining us. With that, perhaps we are going to see the government cap airfares. With that, we have to wrap up this edition of India Business Hour. Thanks for watching. Merry Christmas in advance.
CNBC TV 18, celebrating 15 years of leadership.